Hey there traders, welcome back. It's before the open of market on Thursday, September 4th, and the post-Labor Day reopening gave us a battlefield of volatility before the bell. We've got gains building amid big tech headlines, bond markets rallying, and the ISM data still echoing in the backdrop. Think of today's open like kickoff. If you want to be sharp, tactical, and ready to ride the early wave, let's light it up. So let's take a look first at the futures and pre-market movers. Futures are climbing, as you can see on the right here. S&P up 0.5%. The Nasdaq also up 0.7%. And the Dow is flat to modest, sitting at 45,271.23 cents right now. So this is what we call bullish bias. In the pre-market action, Alphabet is also surging around 6 to 7%. This after a major antitrust court win. Chrome remains intact. Macy's also jumped up 13% after topping earnings and boosting guidance. There's been some smaller movers on the market like TechNet, FMC, Anglo Gold, and Health Equity also up around 4%. On the downside, Bruker and commercial metals are lagging by around 8 to 10%. And as we discussed yesterday, gold is up at an all-time high. Long-term treasury yields are easing and oil is sliding frictionally. So a lot of movement and also a lot of green here. So very interesting and an exciting time for trading, that's for sure. So let's have a jump into the news and talk about the macro pulse, some bond yields, and ISM data. So taking a look at this Reuters article first. Yields are giving relief. 30-year treasuries are dropping off their spike, and that's fueling the bullish tone across equities. So this article today is fueling the news in a big way, and I suggest everyone takes the time to go onto Reuters and give it a read. Essentially, 30-year-old treasuries are dropping off their spike, and that's fueling the bullish tone across equities. Still on the data front, August ISM Manufacturing's PMI came in at 48.7, better than July's 48, but still contracting. That's 6 straight months under 50, but the silver lining is new orders expanded above 50. A slight thaw, but caution remains, traders. What this tells us is bond investors are interpreting the slowdown as Fed friendly. That could give Friday's job number unwinding gently or trigger volatility. So today we matched both strength and steering. Okay, a quick sentiment snapshot and sector rotation today. Sentiment right now is clear, hopeful, but disciplined. Tech has its spark reignited thanks to Alphabet, but returns may tilt into defensives or cyclicals fast if trade chops. Key themes, traders: long bonds cool down, equities strengthen, especially growth and tech. Next, manufacturing still weak but showing signs of bottoming, and rotation remains likely. Stay alert to early movers, everyone. Let's take a look at 2 tactical trade setups. The first one, we talked about it at the open of the video, talking about Alphabet, ticker symbol GOOGL rather. Here we go. So this is our momentum lever, and have a look at that graph straight away. Easy to see why we're talking about it. So fresh pre-market surge after court ruling has been a big catalyst for Alphabet. A buy signal would be entry above pre-market high with sustained volume, and a sell or fade signal would be failure to hold those levels or fade back below VWAP quickly. This will be a classic fade setup. So keep an eye on Google, ticker symbol GOOGL, referring to Alphabet, of course. Alright, our next one then is Macy's, ticker symbol M, and this is our retail re-rate play. So again, have a look at that pop over here. 13% on earnings beat and optimistic forecast. So our buy signal for Macy's, ticker symbol M, will be maintain above today's gap level with volume. This will be continuation potential. Ensure that we've got volume, traders. And our sell signal would be a retrace back below the gap with weak volume. That'll be a tactical short or wait for stabilization. So these names aren't macro plays, they are clean corporate catalysts you can trust with conviction if they respect levels. So look at that graph. Wow. Very, very interesting and a very, very good opportunity. So while we're looking at this, it just made me think a quick trading lesson I'd like to share on gaps. Gaps are opportunities, but gaps are also traps. So why is that? Well, institutions use the open to unload into retail enthusiasm. A stock can gap 10% pre-market, rip another 2% at the bell, and then collapse as pros take profit. So as a rule of thumb, never chase a stock in the first 5 minutes just because it's green. Use VWAP and opening range as your filter, and let the first 15 to 30 minutes prove it's in the continuation or fade. Traders who learn patience at the open keep their accounts live. Don't be the exit liquidity. Okay, let's talk a little bit about execution and strategy for risk management. Focus on the first 30 minutes of activity. It's your heat gauge. Use VWAP and pre-market range like we've been discussing, and volume as your guideposts. And also let winners prove themselves and keep risk tight. If uncertainty creeps in, rotate out. This is still September, where caution pays off. Alright, taking one last look at this now. Our key pre-market meal today is that futures are flashing green. Tech sees fresh life. Bond pullback and ISM data softened the macro tone. Alphabet and Macy's are your headline names to trade, and sentiment is hopeful but an edge. Be tactical, not reckless. So our mindset for today: let's stay energetic but stay disciplined. Trade setup, not narrative. Let the first 30 guide you, then play the trend. I'm going to leave you with this. Today is kind of like game day. Pre-market is your tip-off, and the early session is where winners get earned. Trade smart, stay agile, and may the momentum favor the disciplined. Let's roll into the open, and I'll see you again tomorrow. Thanks for watching the video. Take care.